got Domino's in focus this morning. It reported earnings, missed estimates. We've got joining us to dive into its results, Kenny Polcari, senior market strategist, Slate Stone Wealth. Kenny, it is always great to see you. Whether I see you here on the floor or in the grocery store, our viewers don't know we've seen each other outside.
It is such a pleasure to be back here at the New York Stock Exchange, and to be back here with you is great.
Yes, thank you. All right, so let's start out with a look at Domino's. Mixed bag in terms of its results. The stock taking a hit in the pre-market, but what's your take on it?
So what I find is interesting is that they actually, the numbers grew. The numbers were better. They just missed the estimates. I think the estimates might have been a little bit too aggressive, and so therefore it suggests that, they're not doing as well, or that the consumer's getting weak, and so they're taking 4.5% out of the stock. Some of that I think is a little bit overdone, just like I think what happened in Walmart. I think that was a little bit overdone. But it does speak to the anxiety in the market about, people waiting for that shoe to drop, right? For that negative data point that's going to cause the market to correct. And so when you get eco data points, you get these companies that are big consumer names, that kind of are a little bit more cautious, then it causes people just to take a step back.
I think the Walmart reaction, I know you and I were just having a little bit of an offline conversation about this. The Walmart reaction, may have been a bit too jittery, but the reaction to Domino's, I wonder if it makes sense in the context, if the consumer is pulling back.
Right.
I mean, Domino's, it's usually it's easier on the wallet, so most households can afford pizza. You got families having Pizza Friday and whatnot. But if they have to pull back because groceries cost so much money, eggs cost so much money, they may have to pull back on Domino's.
They might have to pull back, and so I think that's kind of what we're hearing in the numbers, right? Is that there's a little bit of caution, but I do think that that's not going to last. I think the egg thing is very temporary, right? I think that's a bird flu thing. I don't think that's like a supply chain problem in the sense that it's never going to be fixed. It will be fixed, right? And I also think, look, we could talk about this too. Energy is down 10% in the last month since Trump became president, and likely going lower, and that's going to help the inflation story. So that's going to take some pressure off of the consumer. So I think Domino's Pizza, because to your point, it's an easy out, right? It's an easy dinner to have with your family, not super expensive.
You make a great point about eggs being temporary, because our senior markets correspondent, who's a big commodities guy, he says that the cycle of production for chickens and eggs, it's pretty fast.
Right. And so that should come back relatively quickly. And again, that's not, that was because it was a bird flu, not because of any other thing, right? So that will come back. And so I think, listen, Domino's is a fan favorite, right? It's a great pizza. They're all over the place. You can get a pizza and have dinner for your family relatively inexpensive. And so we'll see what happens. But I'm not concerned.
So you put out your daily note with assessments of the market. Given what we saw on Friday, and we saw a couple records last week in the S&P 500, but then you had that de-risking on Friday. Now that seems to have been kind of a pattern on Fridays. Do you see that as kind of a temporary shakeout, or is that something to pay attention to?
So I think it's kind of both, right? Because the market is a little bit antsy and jittery certainly as we move through the end of earnings season, as we now go into, the second month of the Trump administration with the policies and what's going on there, and people unsure. We've got Wednesday, the big elephant in the room is NVIDIA, which is clearly going to define kind of the next broad market move, right? But I think that people just have to be a little bit concerned that the consumer might be getting a little bit stretched, right? Now, you can also argue that November and December, the holiday shopping season, were strong once again.
Right, they were.
And so the consumer's just, taking a breather after having spent a lot of money, right?
We have to pay off all those gifts now.
Absolutely. So, you may have a month or two where the consumer says, let me just pull back a tiny bit. But I think overall, you just always have to be cautious over kind of the economic data points and where we've been and the catalysts that are going to drive the next move. And the next move, I think, the next move for me is actually lower, not higher. Not that it's going to be a crash, but I think you're going to shake the branches a little bit. I think you have to shake the branches a little bit. Look,
a healthy pullback.
Yeah, we were kissing highs, to your point, just last week, 61.50 almost, right? And we've been struggling at that level. If you look at the charts, you'll see it, right? We've been struggling, unable to get through. And so I think the market's just looking for a reason to consolidate and pull back, which would actually be very healthy.
I want to ask you pointed out, you call him Uncle Warren Buffett, the Oracle of Omaha, and the record amount of cash that they're sitting on, more than $330 billion in cash. And he says it's because, things look too expensive. So what do you make of his comments on
Well, so it's
that?
interesting, right? Because everyone's always trying to figure out what Buffett is doing and what that means to the market. Is he really telling us something? Is he sending a cryptic message? Look, the guy's got $334 billion in cash. It's not necessarily that easy to put that amount of cash to work. So he's looking for opportunities. So to his point, do things seem expensive right now? Yeah, probably. Is he looking for a pullback? For sure. But if we see a pullback, you can believe that he's going to take that money and start to put it to work.
Okay. And you talked a little bit about energy prices and how that will help the consumer. Trying to see where oil
They're trading
is
at like
right
70
now.
and a half.
Okay. Okay. So what's your take on, kind of the direction and levels you're paying attention to when it comes to the energy market?
So the move Friday and today has now brought us down below all three trend lines in the oil markets, right? The WTI.
Yep.
So now we're kind of in this $68, $70 trading range, right? Now look, there's a lot happening. Certainly we've got the non-OPEC producers, the U.S., Mexico, Canada, bringing more supply to the market. So it's certainly a supply conversation. I don't think it's that demand is waning. I just think there's a lot of supply. Then you got the Saudis and OPEC considering whether or not they're going to raise production in April or not. Now, if they raise production in April, it's going to cause the price of oil to come down because there's more supply to the market, right? So it'll just cause the oil to go, which, by the way, would be good for the global economy. Wouldn't necessarily be good for the oil producers because the price is lower. Certainly, the Saudis want to see $90 oil because that's what they need to pay all their bills, their infrastructure. But it is going to be what it's going to be. And if oil comes down, in the low 60s, that's going to help inflation around the world, certainly in this country and around the world, which will be better for consumers and better for the global economy.
All right. Thank you, Kenny.
It's a pleasure to be here. I want to come back and do this again.
Yeah, we should. we're going to have you back. That's Kenny Polcari, Senior Market Strategist, Slate Stone Wealth. Thanks a ton, Kenny.